Okay, so now let's take a look at trend lines on live charts. Now it's important to remember that with trend lines, what we're looking for here is we're looking for the trend line to contain the price action of the trend. So we're looking for the trend line to hold the trend in place. Now what I basically mean by this is, let's say for example we're in a downtrend and we get a pullback to the trend line to, pull back to the upside. We're looking to the trend line to contain that price action and provide the markets with a point where we believe that price can reverse and resume the trend. Okay, now trend lines aren't a perfect science. It's not going to be pit perfect or anything like that. They're just giving us an indication of where we can expect to see either a candlestick reversal pattern or a price action reversal or something like that. Okay, and the other thing is that I don't really use trend lines in isolation. I like to use trend lines with support and resistance, with Fibonacci and all of the other kind of good stuff right there. So how do we create a trend line? Well, first of all, we're on the euro dollar chart right now. You select this little guy up here on the top. Okay, you got sort of like a diagonal line there. If you just simply click on that, like so, you'll see that we've selected that line. Now if we move on to the chart, we can literally pick a point in the chart, and what we're looking to do is we're looking to connect at least 2 points together. Okay, so like this here. Now what we've got here is we've got 1 touch, 2 touch. So the next time that the market comes down, then pulls back to that trend line, we're going to be expecting it to reverse at that particular level. Now, as I said, I don't really like to use these in isolation. I'd prefer to use it with like a previous level of support or resistance or something like that. So it would be ideal if actually this particular point here where the price came back to react with this trend line, it would be ideal if we also had, a previous level of support which is now becoming resistance, or a Fibonacci retracement level, maybe that's a 38.2 or something like that. But ultimately, what we're looking for here is we're looking for the price to react to this level and then sell off, which it eventually does. So how are we drawing our trend line? Well, as I said, for me, I need at least two points for it to touch initially. Okay, so I just connect the 2 points, and then I'm looking for price to come back and react to that trend line again. Now you will see out there that some people say, oh, we need at least 3 or 4 touches to consider a trend line valid. And, that's okay for those people, but I'm not trading from the trend line in isolation. All I'm trying to do is I'm looking for areas of interest where I believe the price could turn around. And for that reason, I just need the 2 levels to start with, and then I can project the trend line into the future to see where I believe price may react. So let's move on with this chart here and see what happens. So the price reacts to this trend line, sells off from this trend line, comes back, breaks through the trend line. So what do we do in this case? Well, there are a couple of things that we can do here. First of all, we can readjust our trend line like so. Okay, so we can look to see when the price next comes back to that level, if it respects to that level. We can also put in another trend line here. We can start another trend line like so and see what price does to that trend line. So now we've got 2 points of interest where we believe the market can react. And let's move forward on the chart here and see what happens. So at the moment, this first trend line that we had in, that we readjusted here, is still in play. So we can move on to the chart here and we can see that the price, this is what we're looking for, previous level of support, becomes resistance, coincides with this trend line here. We've probably got about the 50% retracement level, Fibonacci retracement level, in the same place here. And sure enough, the price respects this level and sells off. Okay, so again, it's not a perfect science. It didn't touch it pit perfect, but it did react to it, which is fantastic. So what happens now? Now the price falls away from it, comes back, breaks through that trend line, hence invalidating that trend line. So again, we can do 2 things. We can either readjust this trend line like so, like that, which will be perfectly valid. But we've also got this earlier trend line that we put in earlier. So we've got 1, 2 touches there. And as we can see, we've now got a 3rd touch of this trend line, and it's respecting that trend line, which again is a previous level of support, which became resistance. And again, it's treating it as resistance and it's reacting to that level and selling off. Okay, so as I said, this isn't a perfect science. Okay, it's by no means pit perfect or anything like that. All we're looking for here is we're looking for areas of interest where we believe the price can react. If the price doesn't react to that level, perfect, no problem. We'll move on to the next trade, or we'll adjust the trend line accordingly. But if it does react to that level, then we can have confidence that the rest of the market are looking to that level for a place where they can start to to sell this market again. Okay, let's go take a look at a different chart and see what this looks like on, you know, something like the dollar franc, the pound dollar, or the dollar yen, for example. Okay, so here we have the dollar franc chart. Now again, what we're looking to do is contain our price action. So we've got a couple of things that we can do here. First of all, we've got this trend line in here, like so. Secondly, we've got this trend line that we can draw in over here. Okay, now as you can see, we've got many different options here for drawing our trend lines in. And as I said, because it's not a perfect science, you want to take a couple into account, because it's not necessarily going to be the case that it's going to react to that specific trend line. It could be one of the others. Okay, so this is your outermost trend line. This is going to be your strongest trend line here. And then this is going to be an inner trend line where again the market could react. So what do? We move along in the charts and we see what happens here. And as you can see, the market's actually reacting to this particular trend line here. So we've got one touch, two touch, comes back again, reacts to that trend line. But what do we have here? Because we're not going to use the trend line in isolation, we have a previous level of support over here, which has now become resistance. It coincides with the trend line. So we've got 1, 2, 3 touches of the trend line. Okay. If we were then to put in a Fibonacci retracement over here, we probably find again that that's the 50% level, and sure enough the market respects that level and sells off from there. Now I'm not saying that the market are looking to this trend line and it's reversing because of this trend line. It's far more likely that the markets are reversing because of the previous level of support that has become resistance. It just happens to be that the trend line also coincides with that. We've probably got a Fibonacci retracement line in there as well. So we've got a confluence of levels there. So we've got 3 or 4 different levels which the market can see, and the sellers, because we're in a downtrend here, the sellers are mainly in control. The sellers will use that as an excuse to get into the market and start selling again. So all of these things here that we're seeing, that it's not magic. They're sort of self-fulfilling prophecies. Because these are the major tools that most professional traders use, they're going to work because the traders make them work, if that makes any sense. It's, as I said, it's not a magic bullet. It's not, you know, Jack and the Beanstalk's magic beans or anything like that. It's just simply tools that all traders all the way around the world use to make their trading decisions. And if they're using them to make their trading decisions, then we want to be using them as well. So let's move forward with this chart here and see what happens to this trend line. And again, we can see the market comes back, respects that trend line. Again, we've got a previous level of support here, which has become resistance once, twice. Market respects that trend line, sells off, and goes through that trend line. And then here we have the initial breach of that trend line. So we know that we can either adjust this trend line like so, adjust it there. We can see that the market pays no respect to it again. So we can really say that this trend line is useless to us now, because the market is starting to rally a bit more aggressively. But look here, even though it does eventually break through it, the market still respects this trend line in some way. It still comes to this trend line, which we put in from all the way back in February of 2011, and this trend line comes into play all the way in September, the end of September, October 2011. So that's nearly what, 6-7 months on, and the market still, it hasn't respected it completely. I mean, this is actually a fundamental move here, but the market is paying attention to this particular level, and that's all we need to be able to make money in this business. All right, let's go and take a look at another chart and see if we can see similar sorts of behavior. Okay, so here we're going to take a look at the dollar yen chart. What we're going to do here is going to select our trend line tool again, click here for the top of this move, connect it to our 1 point there. So we've got 1, 2, 3 touches, and sure enough, what happens here, the market comes back to that level. It finds resistance at that level. If we were to draw in a horizontal support or resistance line across here, I'm sure we'll find that that actually coincides with this particular support, which is becoming resistance. We've got the trend line there as well, and again the market finds resistance at this particular trend line and sells off. Okay, and I could show you this time and time again on many different charts. What I want you to see here, and what I want you to take away from this, is that trend lines can be used as an indication of where price could turn around. It's not to say that price will respect that particular level because that trend line's there. It's more to do with it being sort of like a self-fulfilling prophecy. So we're using this in conjunction with other tools. And if we get a confluence of many different levels, we can be a little bit more confident that the rest of the market are going to see exactly the same thing. And because they see the same thing, they're going to use that as an excuse to come back into the market and push the price in the direction of the major trend. Okay, so our trend lines are there to contain the major trend and nothing more. We're not going to use it in isolation, and I must stress this. We're only going to use it when we get a confluence of different levels. So maybe the trend line in a Fibonacci retracement line, or a trend line in a previous level of support or resistance, or something like that. We just don't want to use this in isolation, but it is a nice tool that we can use to help us, decide when we want to get back into the markets. I hope that makes sense to you guys. Jump onto your charts now and see if you can spot a couple of charts where you could use the trend line, and look to see how price reacts with this trend line, and I'll catch you in the next video.